Testing. All right. Let's go, YouTube. We're back. All right. So today we're going to do a recap of our trade we took in the AM session. It's been so long since I've made a video, bro. I'm so happy to be back. All right. Let me just clear all this shit. And then we're going to go back through it. Show you what I was looking at today. Let's say about 8 a.m. All right. So first things first. We gotta get this on the same time. Oh, stop playing with me, bro. Alright, type shit. Alright. Well, we can't reverse this, but first thing we noticed were these equal highs right here, left behind during London session. Type shit. Kind of got this ghetto setup for a mic. It is what it is. So, like, we have a fair value gap right here, like a whole area of inefficiency. We mark that out. We're not gonna mark every single fair value gap because that's just like clutter on the charts. We see this imbalanced price. We expect it to come back. We don't know where it's gonna come back to. That's why you want to watch price and then drop lower just to see if it's gonna retrace here or here or here. You don't know, or it can just drop through all of this. You don't know. You want to watch price, but on top of that, you want to build context. So going in today, I was looking at ES and like, what is our structure? Ignore this large down close move. This wasn't there. We're only looking at this, and where we're trading at. So when I got on the charts at like, I got on the charts like 9 a.m. So price was already like trading down. So we're like, all right, price is probably trading down to this area of inefficient price. With that in mind, we're like, okay, what's the liquidity in the opposite direction? These equal highs, these highs, Asia, previous day. Let's keep that like that. Then you can kind of see what I was looking at. Okay. Now, when we go to the daily, though, you always want to start with your higher time frame. We had this fair value gap right here. Let me drop lower. Ignore this large ass down candle. It keeps resetting. We also had this area. Another likely retracement back to a fair value gap. And then so at this point, we know we're trading inside a fair value gap to the left for inefficient price. We know we ran London lows. So that's a run on liquidity, run on stops. Then we went ahead and marked the lowest fair value gap to the swing. because we know if it breaks this and breaks this, we're likely bearish. So that would invalidate our bias. We were expecting in a PO3 model, that's what we were looking for. Asia lows ran, London lows ran, a manipulation, and a distribution in opposite direction. Fucking stupid mouse. I need to get a new mouse. So, this is what we were looking at. So on NQ, we ran London. At the same time, there's equal highs on ES. We know these two pairs are correlated, so they're likely going to go the same direction. So I'm like, okay, well, ES still needs to run equal highs. This is probably a good time to go long. We're trading inside a fair value gap. Oh my god, I keep switching the wrong thing. Zoom forward a little bit. We got this large move. Also, we could take a look at news. There was no news. This is likely a breaker, right? Because we made a new low. Broke that swing. It's a breaker. This is a sign of volume entering. We dropped lower. Now this area you don't want, like, this is a fair value gap. Okay, this is where a lot of people go wrong. And then you're like, okay, fair value gap, I'm gonna wait for the price to trade back too, right? Never does. Never does. So you miss your entry. That's not every fair value gap is the right one. So you like you could have marked this fair value gap. Oh my gosh, I'm going short. Shorted off of it. But what's your target? Are you targeting these lows? When are you going to take profit? When are you going to take partials? So you just got to be patient. At this point in time, NASDAQ is kind of leading ES, you see? Because right here, you can see the candle 930, 930. Look at the difference in structure. The candle on ES didn't even break this swing high, but it impulsively moved up. On NQ, it broke the swing. So we drop lower. Wait a second. There's one more thing I forgot to mark up. I think it was this inverse right here. I think that's what I had on my chart. Is this inverse? And then also this too. This, I didn't really mark that up until after I took the trade. But this is an area to target or take partials. And then we dropped lower. Kept watching price. Like, we're likely just going to continue higher. And then so I started looking for targets. What EF did I mark up? Where the F was it? This, right here. This is like relative equal highs. This was one of my targets. And then also London, Asia highs. This is where I took partials. Because we know when price runs a swing high, this is where it could likely retrace. So we didn't want to get too greedy, so we took partial to Asia highs just in case it decided to go the other way. And then we also had a target at these previous day highs. So this is all like stacked liquidity. All of this. Low resistance. All these highs, trend lines for retail. Then we just let price continue to print. Then we got this. Does not mean we're going short. Does not mean price is trading directions. Let's play it. All right, let's pause for a second. Let's go back to this. This fair value gap. Price tries to come back to a little bit, kind of scrapes it. You could have entered right here. Entered long, right? Targeting Asia highs. That would have been a better risk reward entry because you could have entered down here, lower price, setting your stops like below the fair value gap or even down here, whatever you're more comfortable with. I think at any point in this moment, I would have longed. I should have longed. This last down move, that's your order block, and this is also where I went long. I went long right here. Oh, we're not gonna buy today or what? Type shit. I don't know what the F is going on with TradingView. But I went long right here. Bro, like what the fuck? Hello? Oh my fucking god, I hate technology, dude. Like what is happening? Just quit drawing. Type shit. Anyways, I went long right here. Fucking absurd, dude. I swear it's always something. Like always. Like, bro, what the fuck? Oh, now there's gonna be 7 million fucking boxes on my thing because. Oh my god, bro. Oh my lord. Well, you can see price ended up going there. I was trying to play it ahead for you to show you guys. Yeah, pretty much. I went as this body closed right here above this swing right here. That told me that this is an order block. Because what is an order block? If you don't know, and then it puts on replay. Like, bro, nobody wants a fucking watermark. That shit was not there. A literal replay watermark. Like, TradingView just updated in fucking the last 2 minutes. Alright, what is our take profit? We aim for this, even higher. I aim for all of this, but I ended up closing early. This was a target too, because on the higher time frame, this is a fair value gap. So you could have had your take profit up here. And then where do you set your stop? It's all a matter of how much are you comfortable with losing. That depends on how much you're risking per trade. Are you comfortable with losing $60? Can you afford to lose? That's all depends on how much. Like, if you risk what is it? One lot. We'll call it one lot or one contract if it's futures. If you risk one lot, that would have been $30. So you just cut it in half. Like the more you risk, that like kind of, you just kind of have to play with your risk to reward. All right, back to what I was saying. An order block. All right, so you're making higher highs, higher lows, and then we switch. That's an order block. It's an order block. Like every swing is an order block. But that doesn't mean go mark every single higher and higher low. Like you gotta play it in the context. Like right here, bearishly, this is an order block. And you could have shorted out of it. Over here to the left. Last down move for up move, that's an order block. Order block. Right? This is a breaker. Because we low and then we make a low and then we break that. So that's a breaker. You don't need price to trade back to. You could have longed right here. Like you don't really want to get too stuck on the size of the candles, but like pay attention to the swings. So like we're making higher high, higher low, higher high, higher low. And then we switch. This is our switch. So in this price leg, we're bearish. Right here. That's where price changes delivery. And then you kind of just wait for price to trade above, excuse me, inefficient price. So we had this inverse marked up and then the body close above. This is a sign that price is bullish. Excuse me again. When I placed this trade, I kind of set my stop loss below the fair value gap. It's hard to decide where you're going to set your stop loss, especially with these volatile ass markets. We could have went long right here, and price could have traded all the way back here, maybe even lower, and then went long. Like you never know. Like Nasdaq just literally does its own thing, depending on what Trump says. Like price is literally just all over the fucking place. So you just gotta be patient. And so I let the trade go. I didn't care about all of this, blah blah blah. Oh my god, I'm gonna close the trade early. Right? Oh my god, I'm closing the trade early. Nope. Nope. Right here, I moved my stop loss break even. So I'm like, all right, we're gonna come back here. I'm just gonna get stopped out break even. trade run and TP smash. And then we can continue to play just to show you how price continue on higher. But I wasn't holding through all that chop. I'm like, all right, we're trading at highs. So, like, right here, it was a fake out, but that's a shift in the state. So if price wanted to continue bearish, this is the, like, exit. Boom. Okay, at this point, now let's scroll to the left. Candle wick, candle wick. And then candle wicks. All in like the same price range. So we have this marked for future reference. This is likely an equal high. So price will probably be coming back up here. I don't know why my stop loss is all the way to F down here. That was how I set the trade. 1 or 2 restored, I guess you can say. We locked in about 50%. And then I marked this up, then I walked to the store. But what is this, SysD? Okay, on the 15-minute, right? Swing high, swing low, swing high, swing low, swing high. Candle close below. This was your first change in the state. Boom, next. So you drop lower. Like, even right here, this candle closed right here. I mean, I wasn't trading in the PM session, but if you go in a PM session looking for the run on the AM session liquidity, which this is AM session, and now we're trading at highs. So all you just need to do is look for the change in state. We got it. So now you drop lower to look at the internal candles. And at any point you can take a sell right here. Personally, I would have took a short right here in this area. Or even this candle body close right here. As this candle body close, I mean, but it depends if you're more scared you're gonna miss the move, right? So you enter on continuation, or if you like entering as prices like trading against you, whatever your emotions can handle. I kind of like to see that price is wanting to continue. So like I look for bodies, like body closures. I mean, we didn't really get the body closure below this swing, but up here, because this is a higher high, higher low, higher high, higher low, we got it up here. So, dude, fuck off. You. So, like, this body close below this, or even this swing. And then as this candle is trading up here, is where you can enter. So, like, go back to the 5. So when this candle closes, and this one is blue, you enter short, pretty much. It could have traded back up here. It could have traded back up here. Just enter a short and set your stop at the highs. Remember I mentioned the left open fair value gaps, right? This one, low resistance liquidity. It's like a trend line. Boom, smashed. Just like that. We're gonna mix up this video edit, and you'll be seeing it on YouTube. Peace out.